Hello, ladies and gentlemen, crypto deep divers. Welcome back to Weekly Crypto. Today, I'm going to talk about indicator signaling the stock market crash. Also, I will touch on the Chinese bond defaults as well as the quantitative easing. In case you haven't installed a Brave browser, you can check it out. It block out all the advertising and serve the internet faster. And also you can earn basic attention token as well. If you're interested, you can click the link below. That will help out my channel. So before we get into that, make sure you subscribe to my channel so you don't miss out the upcoming airdrop or token swap. Also, you can follow me on Twitter as well. So let's talk about the signal. So what is the signal? The indicator that tells you the next stock market crash is basically inverted yield curve. You probably heard about that. So I talked about inverted yield curve in my previous video, probably at least 4 months ago. So it's saying global recession, inverted yield curve. If you watch my previous video, you should not miss the stock market pump, right? Right now, the S&P is at all-time high right now. And the curve was basically inverted back in August 2019. So I think early on, like March 2019, they also inverted shortly, very short period of time. And all of a sudden, because of, there's a lot of manipulation in the market and all that. And it is not inverted anymore. But in August 2019, it was inverted. And even though it is inverted, it doesn't mean that they're going to crash right away, the stock market. So based on historical data, for example, for the financial crisis back in 2008 and 2009, the curve was inverted basically in December 2005. So it takes almost 22 to 24 months before the next crash. And actually, after the curve was inverted, the stock market kept pumping. So if you go back to the stock market, the S&P, you can see, let's go to all. So you can see the S&P back in 2005, December, you have you have an inverted yield curve, right? And then the stock market still keep pumping and pumping until October or November 2007. At the time, S&P is at all-time high, and in 2007. Then the stock market crashed after October or November 2007, and 2008, 2009 is a financial crisis. So let's go back over there. So right now, the inverted yield curve is in August 2019, right? It probably takes about 17 to 24 months. Some say 6 to 24 months. And before the next all-time high, it could come earlier. So not a financial advice. Use your due diligence. Nobody has a crystal ball. It's up to the big whale, how they want to play the game. Right now, you have so much liquidity inject back to the market. And I will touch on why there's so much liquidity in a while. So so right now, the curve was inverted back in August 2019. It takes about probably 17 to 24 months, which is you're talking about maybe August 2021 or before that, maybe a little bit earlier, to reach all-time high for the stock market. Once again, not a financial advice. Use your due diligence. Nobody has a crystal ball. I'm not a financial advisor. So this is just based on the historical data. And this has been predicted for the past 50 years, has been predicted at the next recession pretty accurately. So you can go back to in the 80s, is the oil embargo, right? And then you have and then they go to a recession because of the inverted yield curve. You can see here is inverted, and then they go through in the 80s. In the 80s, go through the hyperinflation and then stagflation, and because of the because of the stagflation, the Fed increased interest rate. At the time when you put your money into the bank, you probably get 10 to 15% interest rate, right? The reason why they increase interest rate so much because they want to control the inflation. Because of the tightening policy during the time, it's like 10 to 15% interest rate if you just to borrow if you just put the money to the bank. And in terms of the mortgage, it's like very high too. I think at the time maybe over 10% for the mortgage. at the time. So at that time, it's a tightening policy. That's why, because of this tightening policy, they go onto a recession. And then you have another negative yield curve right here. And after that, you have another negative yield curve back in the 2000 because of the dot-com bubble. So after the dot-com bubble, you have a housing bubble. The next thing come around, maybe the corporate debt bubble, or maybe I don't know, maybe the some type of bonds bubble. I don't know. We'll see. Not a financial advice. So the next stock we are going to talk about the Chinese bond defaults. So because of for the past decade, China has been like building a whole bunch of infrastructure. They build railway, they build like roads and housing community. And right now, some of the community is like a ghost town. They abandoned the building. They basically overbuilt for the last decade. And of course, all this building, where do they get the money? Because of course, they're going to use borrowing money from somebody else, right? To build all this infrastructure. You can see the Chinese bond defaults has been skyrocketing from 2017 to 2018. In 2017, you only had 20 billion won, and it have been skyrocketing to 2018 around 120 billion won, which is around 18.7 billion US dollars, and 2019 is similar. So this is a whole bunch of default like coming up, right? The wave of default basically, and there's also some bank run in some of the city. And you can see there's along the coast, there's a whole bunch of defaults, along the coast of China. And Shandong is the fourth highest default in China as well. And the problem, skip this one. And the problem is because those Shandong company, they guarantee each other loans. So if they guarantee each other debt, if the company is healthy, it's fine. But if two companies or three companies, they are not healthy financially, and they guarantee one another, that means if one goes down, it drag along with other as well. So this is not good. This is like a chain effect. So one fell, the rest will fall as well. And I don't know, this may turn really ugly. I don't know. And of course, the Chinese government is going to print tons of money to save their state-owned enterprise. But the private enterprise, they're not going to save them. They will let them collapse. So this is, the thing is in China, if you know somebody, then of course your company probably got saved. But if you don't know anybody, you're just a private enterprise, you probably will go under. And unfortunately, you're going to file bankruptcy and default as well. So in other sector, this may be a black swan event. Also, Hong Kong may be, as I mentioned numerous times, may be a black swan event as well because of the continuous Hong Kong protest and Hong Kong as the world financial center. Because they really are good. I mean, they have financial center because Alibaba, they raised about 12.9 billion in Hong Kong Stock Exchange. Where in the world you can raise this kind of money? Where in the world? Not even in some other stock exchange. But of course, Alibaba is listed in New York Stock Exchange as well. And so this is basically like 12.9 billion because Hong Kong is a financial hub or financial center. They attract a lot of foreign capitals and a lot of financial, connections and all that. So they attract tons and tons of capital. Plus, Chinese, they have, in Hong Kong, you have 7 billion people. There's a lot of wealthy individuals in Hong Kong, high net worth individuals. They probably they like to do IPO. In Hong Kong, basically, you can buy initial public offering. Even a little guy can do that. Of course, in the US, you can't do that. In the US, only the accredited investor or you have to go through the brokerage firm in order to do that. But in Hong Kong, it's pretty free. Anyway, so I don't know how Hong Kong still maintain a financial hub if China still want to have a total control of Hong Kong in terms of freedom of speech, freedom of association, and also the rule of law also threatened by the totalitarian regime in China because of the president in China basically can rule China for life because they changed the constitution. Right now, they're basically under totalitarian regime. So I'm not sure if Hong Kong can still maintain the status. And Hong Kong used to be a gateway to China, but right now it seems like Chinese government want to have a firm grip on the former colony. Let me know what you think about this. And also, I want to say something about Alibaba. So Alibaba Jack Ma retired, right? He retired at the age of 59. So he's still young while he retired. The reason is very simple. When your company grows so big and have such a big influence in China, the Communist Party want to take your company back. So in the communists, they don't respect intellectual property. They don't respect private entity or private company. They would just take your company. Once your company is successful, they will take your company or take your life. If you don't give me your company, you're going to be disappear. So of course Jack Ma is going to step down. He's not going to risk his life, right? And of course he can cut a deal with the communists. So he still get some money from his enterprise, and he keep his life. He enjoy his life, but basically the communists want to control Alibaba. But anyway, this is maybe a rumor, but this is what have been. I don't know. So what do you think? Please comment below as well. So let's talk about quantitative easing. So the Fed is basically engaged in another round of quantitative easing. The reason why I say that is because of the Repo market. And of course, the Repo market, people are talking about it since September. And at the time, the overnight Repo spiked to 10% in September 17. Repo basically interbank, just borrowing money between the bank, basically. And obviously, the bank do not have enough money, and that's why, or they don't have enough money, or they don't trust the other party because they're afraid the other bank is not going to pay them back. So that's why the overnight Repo is 10%. So the Fed, the central bank, has to inject into $500 billion into the Repo market. So you can see here the Fed's liquidity flood, inject more than 200 billion of temporary funding, and it will inject up to 490 billion around December 31st. You can see there's a pump up of the free money to the bank. Basically, just put in a computer how many zero and shoot it to the bank. So they just print the money out of thin air, basically. I wish they send it to the little guy, right? No, they send it to the big banks, not you. Not the average Joe, sorry. And of course, you can see the Fed balance sheet has been increasing like crazy. And of course, the stock market is pumping like crazy because of the Repo. This is another version of QE. And it's just so surprised you see the survey. This survey is, I think, is just crazy. They basically, there's a survey to the equity investor. What do you think about Fed's Repo operations? Is Repo is a form of QE? And based on the survey, 53% say yes, this is QE, and 19% say no, and then 28% say they don't know. Seriously, if you're an equity investor, you don't know what's Repo, you shouldn't say yourself an equity investor, because basically you have no idea what the fundamentals of the monetary system, what they are playing the games, they don't know what the basics of the monetary system. So I'm surprised. For me, I would think that if you're an equity investor, you probably think 80% people agree that this is QE, but yet only 53%. So that means people are not very educated in terms of the whole scheme of things, in terms of the monetary policy, how money is created, and what is Repo market, what is QE. They don't even know. Probably they didn't even know what is quantitative easing. So. So I'm surprised the survey, only 53% say that. I thought it would be 80 to 90% they say it's Repo is QE, but obviously they don't know what they're talking about, and so that means the equity investor is not very educated. So they should not be investor. They should probably say equity ship or equity hertz, right? Equity FH Joe, right? Because obviously this is printing freaking money. Anyway, so you can see the weekly change in S&P. And of course, right now the stock market is highly manipulated. But anyway, so it's up to the whale how they want to play the games. And I don't know if you still remember last year before Christmas, you have a stock market crash like 400 points in just one day, and because of the Fed want to tightening the tightening policy, because of the stock market crash in just one day, they decide not to tightening anymore. So that means there's more freebies from free money for easy money and keep the morphine going. Keep the economy on a life support, still euphoria and all that. So you can see the S&P has been like going back up once again. Right now it's at all-time high. So this is very interesting how it comes to the end. And of course, the VIX, the volatility index, is pretty low. People are still thinking, okay, still quantitative easing, keep printing money. So the party is still going on. The party is not over yet. The music go on. The musical chair. I see last time when the music stopped, like in 2008. So then I don't know. That'll be interesting. So S&P go all-time high. The VIX is pretty low. It's too complacency. That means it's risk off. So they are taking higher risk for the equity market. So let me know what you think about the QE. Do you think the Repo is another form of QE, or you don't think so? If not, if you disagree, please comment below. If you agree, please comment below as well. I would love to hear from you. This is pretty interesting how it turns out. Nobody have a crystal ball, and I don't have a crystal ball as well. What do you think about the inverted yield curve? Do you think this is a very accurate indicator to indicate the next financial collapse? And also, it can also tell you the next all-time high of the stock market as well, right? It gives you two indicators, right? So if you watch my previous video, you should not miss this stock market all-time high, right? And what do you think about the Chinese bond default? Let me know what you think about all the overall economy. What do you think? I would love to hear from you. If you find this video helpful, smash the like button, subscribe to my channel. Also share with your friends. Make sure you subscribe so you don't miss out the upcoming airdrop or token swap. Also, you can follow me on Twitter as well. Make sure you comment below. That will help my ranking in YouTube. I will continue to provide quality video for you guys. Remember, crypto deep divers, we the people take control of our money. Stay wise, stay safe. Peace. I'm not a financial advisor. Investing in cryptocurrency or commodity has inherent risk. Please use your due diligence. As well as stock market has inherent risk. Use your due diligence. I'm not a financial advisor. You have to manage your own money.